Welcome to part second of the video titled Morgan Stanley. So guys, let's have a big round of stupidity by Morgan Stanley. Now I'm reading the paragraph number 4 that set the length of military action in Ukraine could determine its impact on earnings and multiple. What the hell are you talking? Because in the first paragraph, you said that Indian equities have so far resisted. And now you yourself contradicting that the length of the military action in Ukraine could determine its impact on earnings and multiple. Interestingly, Sensex is now in a bear market in oil terms. India new profit cycle remains intact. Now, which profit cycle Morgan Stanley is talking it about? I would like to highlight this point. This is there in this article. Indian corporates are raising a huge amount of debt. There is not a single doubt in that regards. When I say debt, I mean to say whether this is top corporates or whether this is mid-sized corporates or whether this is the lower side corporates. All are raising a huge quantity of debt. Rather, to be honest and precise, none of the media houses, India or foreign, or the foreign brokerage houses, forget the Indian brokerage houses, they dare to discuss this. Even today, as we speak, Punjab National Bank Housing Finance, they have approved to raise another 2,500 crores. And it is not that they are raising it. Almost all companies in India are raising this. Almost all. But one beautiful fact of India is this discussion, which is the debt in the books of Indian corporates, is away from any discussion. And when these companies default, because common sense is when you are raising the debt, you are bound to pay the interest. And of course, you need to repay the principal. We have seen the example of future retail. As we speak, do we have any data? I repeat, any data suggested by any foreign brokerage house whereby this brokerage house talking about the interest cost in the books of the Indian corporates? No. Not a single magazine is even talking about that. Not a single Indian magazine. But Indian corporates are raising debt. And the prime example is the Tata Group. The huge quantity of the debt sitting in the books of Tata Group. Airtel, Tata Group, Vodafone, many. Have you ever seen any foreign brokerage house, the so-called Morgan Stanley, dared to talk about the debt in the books of Bharti Airtel? Have you seen the annual financial statements of Bharti Airtel, which are on their website? It is not that you need to talk to Sunil Bharti Mittal for that, or he would be emailing you. It is on their website. You can check it out. 30,000 crores, near about 30,000 crores worth of finance cost in the books of Bharti Airtel. Have you seen the net worth of Bharti Airtel? Have you seen the how much money Bharti Airtel raised in the last 2 to 3 years? And how much more money they are consistently raising? No. We actually not at all, not at all bothered about that. Because when this information never comes in public, we hardly bother about that. And here, Morgan Stanley is talking about new profit cycle. Okay, let me study. India new profit cycle remains intact as earnings are expected to grow at 22% for the next 2 years versus 24% estimated earlier. Super. I have to say it is super. Because you talking about earnings. Note the word earnings. Now, what the hell is earnings? Earnings means the top line. The top line. You not even talked about operating profit. You not talked about EBITDA, earning before interest, tax, depreciation and amortization. You not talked about PAT, which is known as bottom line. You not talked about that. And forget the debt. But if I look at this, I feel like Morgan Stanley is talking about that. So when Morgan Stanley is talking about that, there must be an element of truth. But the hard reality is, rather than having an element of truth, there is an element of stupidity in that note provided by the Morgan Stanley. Now, implied volumes and market breadth, among other indicators, are suggesting market is likely to find a floor sooner or later. Implied volumes and market breadth. In the countries like India, where people can manipulate the stock easily, and especially on the Indian business media channel, I'm not naming any business channel, but Indian business media channel, who gives substantial calls like buy this, sell this, buy this, sell these, and people just follow them blindly. What the hell is implied volumes? Is the stock market is going to be judging on the volume or the strength of the company? Let's have Paytm, Zomato, Nokia, Policy Bazaar, Airtel, Tata Group, many such companies. Can you compare the stock price of these companies only on volume and market breadth? So Paytm was listed at 2,140. Nokia was near about 2,500. Zomato was around 140. Now see them today. See Bharti Airtel. See TCS. The hype which is created by Indian media that by TCS, they are doing the buyback, the 18,000 crore buyback by the TCS, and bloody hell, which is created by the Indian media. Now, where is this hype? Where is this hype? Nowhere. India Info Edge. Many such stocks I can give. Now, this clearly suggests that this is back tested, which means I am going to be speaking what I love to speak. I will not talk about operating profit. I will not talk about the interest cost in the books of Indian corporates. I will not talk about the refinancing cost in the books of Indian corporates. I will not talk about the debt in the books of Indian corporates. I will not talk about the credit ratings in the books of Indian corporates. But I would be covering about implied volumes and market breadth. This is called a foreign brokerage house. This is Rahul Magan from Treasury Consulting Group. See you in the part 3.